All right, folks, as mentioned, it's a T3 Tuesday, and we have a special guest here today. This is actually a new T3 trader. Let's go ahead and give a warm welcome to Scott Bauer. Let's go ahead and bring him on. Scott, good morning. Welcome to the program. How you doing, my man?
Good morning. Thanks so much for having me. I'm doing great.
Okay, a couple of things here real quick. Obviously, with this being your first appearance, I actually had to look into you, and I got a couple of things that I am happy about. First of all, born and raised in Chicago. Me too, buddy. Currently in Chicago right now. Absolutely. What do we got here?
My World Series cup of coffee.
Okay, but is that a Cubs World Series or a Sox World Series?
Oh, no. It is a Cubs, and it is a very, very mournful morning with the news about Ryan Sandberg. So.
Indeed. I actually opened the show with that really quickly here. My mom in the 80s wrote Ryan Sandberg because they named me Ryan because of him. The guy was such a class act that he actually wrote back and also included some autographs, including his Fleer rookie autograph. So I really appreciate that. We are absolutely mourning that. This is the greatest Cub of all time, in my opinion, my favorite, at least. Also, by the way, guess what? I worked as a bank teller, and I was an umpire in baseball earlier. So you and I have a lot in common.
In Skokie, right?
Well, actually, I umpired baseball around the Glenview area, which is where I grew up. But I did hit a couple of those traveling teams, and Skokie was going to be one of them. Awesome. Okay, so people might have seen you before on Fox Business, Bloomberg, and CNBC. Can you tell the group a little bit about yourself?
Absolutely. So I got into this game back in 1991 on the SIBO. I had actually a baseball buddy of mine who was a few years older than me that was a trader. And he said, come on, you want to learn how to trade? I'll teach you how to trade. And no, I don't want to do that. And said it again about 6 months later. I'm like, sure. So that's how I got into the business. And back in the day, that is how you got into this business. You just knew somebody. So I came in 1991. I went on my badge, which I actually have. I keep it in front of me every day. Here's my actual SIBO badge. Went on a badge in 1992, and kind of the rest is history from there. I've had a very long career on the floor, off the floor, always been affiliated with the SIBO. I traded in Bank America, Coca-Cola, Gap stores, Rambus, but kind of my biggest foray, my biggest entry, I guess, into the world of trading was back in the late 90s when Amazon was listed, brand new puppy of a stock, and it was listed, and the SIBO was fortunate enough to get those options. Back in the day, there was no multiple listing of options. Every stock just went to a certain exchange. We fortunately got Amazon. Well, literally, there was not one trader on the floor that wanted to trade this stock because it was so volatile. So I went over to that pit where it was at, and I literally was the only trader in the world for about 3 months trading Amazon options. And that was a pretty wild time. And I would tell you that my specialty is trading volatility. And what I learned from trading Amazon options back in the day, we're talking when the stock was, $40, $50, but probably way more volatile than it is right now. That has really catapulted my career. And I went on to be a partner at Goldman Sachs, and I traded and ran their S&P 500 operation for them at the SIBO, and went on to develop my own trading education business. And here I am now with T3, loving every minute of it and teaching people how to trade.
Okay, I can't wait to dive into this. Folks, don't get lulled by these recent highs. Volatility is always lurking. Discover how smart traders are playing both sides of the market before the next wave hits. Go ahead and scan that QR code at the top corner there if you want to hear more from Scott. Okay, Scott, I ask all of the T3 guys, you guys that are professional traders, I ask you guys all the same question the first time I talk to you. Can you go over your morning routine and how you prepare for the trading day?
My morning routine usually starts about 2 a.m. because I don't sleep. I'm an insomniac, so I'm constantly watching the market. That's not a good thing. I don't recommend that to anybody, but I'm constantly watching the market, constantly seeing what's in the news, what's moving the market. I'm always preparing days ahead with stocks that may have an announcement coming out that have earnings. So obviously these next few weeks are really, really huge for me and my students and what I
Mhm.
do. So I am really preparing for many of those stocks ahead of time. Um, Household names and names that maybe you've never heard of, but names that also have a lot of option volume, open interest. So I am constantly evaluating that volatility, looking to see if there is volatility arbitrage between, selling massive premium ahead of earnings, buying something further down the road, and really just looking over my portfolio, making sure that it's balanced somewhat. It's not always
Mhm.
hedged long and short, but balanced somewhat so that if there is a 2, 3, 4% move one day, we know that we are good to go. So that comes back from the way I traded on the floor. I was a really, really conservative trader. Now that doesn't mean that I didn't trade a ton, which I did. In fact, I probably had in the equities some of the largest positions out there, but I was always delta neutral. So I try to maintain that in the same manner now. I know it's a little different trading on the screens than obviously trading in the pits where I was a market maker. Now we're market takers, but that's really how I'm preparing for the day. And then, as news flow comes out and I'm getting alerts and looking at my scanners, that's what I'm looking to take advantage of. But I am always looking ahead a few days to see what may impact the markets, whether it's an individual stock announcement, eco data. This is obviously a huge week for eco data.
Yep. Yep. Look ahead to stay ahead. That makes a lot of sense. Scott, can you do us a favor? Can you tell us a little bit about the Prosper Trading Academy and what students can expect from that academy?
Absolutely. So myself and 4 or 5 other real traders, former traders from the floor, we are all educators, and so we are live with our students. That is 8:30 to 3 Central, 9:30 to 4 Eastern time. We are live with our students in our rooms, trading with them, explaining what we're doing, going through potential setups. Even if we don't make a trade, we're still going through the rationale. We're going through the technicals and the fundamentals so that our students learn live on the go. So, they can go to our educational campus if they miss attending during the day, but these are live sessions that myself and the other educators are literally working hand in hand and interacting with our students on a daily basis.
Okay, that's actually a perfect segue here. Can you talk about some of your favorite setups for option trading? Do you look at a chart? Do you look at a news? Does it have to do with a binary event like earnings or just the way the options are priced? Can you talk a little bit about that?
Sure, it absolutely does not have to be a binary event. In fact, when there's not an event, there's not earnings or something else. That's actually a great time to look at things as well. And because I am really well versed in trading volatility, I love looking at time spreads, diagonals,
Mhm.
calendars, and taking advantage of if volatility is low, I want to buy time. If volatility is high, I look to sell it. And we know that
Good.
volatility is always mean reverting. Now, that doesn't mean we don't trade if volatility is not on one end of the spectrum. There's always a potential setup. But what is so important is so many people get caught up, especially now. And I know you were just talking about the meme stocks and stuff.
Mhm.
So many people, especially if you're a new trader, get caught up with the FOMO of trading and you feel like you have to be in the game. And that is one of the biggest mistakes that traders make, especially new traders. And so we try and teach our traders that, okay, you're not going to be necessarily trading every minute of the day. And every opportunity we look at doesn't mean we're going to trade it. But I know you have FOMO. I know you want to be in the game, but I promise you, after doing this now for 34 years, there's always going to be another trade to make. That I can guarantee, whether it's 5 minutes from now, 20 minutes from now, later in the day, tomorrow, there is always going to be another trade to make that fits the requirements we're looking at in terms of reward to risk, timing, all of that sort of stuff. So we really get very in depth with our students, top to bottom. Reward to risk is a priority. and watching, always watching our risk is imperative. It's essential. And that's probably one of the first things that we teach our students is you don't have to be huge in this game, but you do have to always monitor your risk.
That's a really good point. We talk about, protecting your capital being the goal number one for every single trader that steps into the market every single day. The profits will come if you focus on risk to reward first. It's great to hear you talking about the same thing. The other thing, I love hearing that you're trying to teach people to be patient. It seems to me, I've only been doing, I think I'm on my 12th year now doing this. And the one thing that I have learned for sure is that the market is absolutely a mechanism to move money from the impatient to the patient. So I try to be in the patient category there and make sure that we collect anything that we can. Okay, don't get lulled by these recent highs. Volatility is always lurking. Discover how smart traders are playing both sides of the market before the next wave hits. There is a QR code at the top. If you're having trouble with the QR code, I went and threw the link there in the chat. All right, Scott, we're going to get to everyone's favorite section here. What do you like right now? What setups do you see out there right now? Where can traders kind of look to find some decent trades here?
So number one, I think volatility is too low. Now we can look at the VIX and you can say, oh, well, the VIX is justified being at 15 because we're not getting these 1% moves a day like we were. In fact, I think we're on maybe day 24 or day 25, somewhere that we have not seen a 1% move in the S&Ps. And a VIX of 16 is really representative of that 1% move. But I think vol is too low. So the opportunities outside of earnings season here, I'm really looking to buy premium, to buy volatility, whether it's September, October. I personally typically do not trade much further out than that, than going out 1 or 2 months. And I do that specifically because I understand implied volatility better when it's closer dated. There's more variability the further you go out. So I typically stick to, 4 or 8 weeks, something like that. So I'm looking to buy premium. Now, if I'm looking at potential earnings setups or even a setup to do something for this Friday's non-farm payrolls or on the Fed report tomorrow, typically when I get in a situation like that, I will also look for a time spread. I will look for, does a diagonal, a calendar make sense if that implied volatility arbitrage is far enough apart to sell that expensive premium, buy something that's a little bit cheaper. That is my go-to. My go-to are these calendar spreads. But that doesn't mean that we don't trade just about every type of strategy that's out there. When volatility is high, I'm definitely in the camp of selling premium. When volatility is low, I want to buy it. And it sounds so simplistic, buy low, sell high. And everybody does that, right? It sounds so simplistic, but if you really understand how volatility works, then the system works.
It sounds simplistic until it actually happens. And then you get a very quick lesson that it's not actually as simplistic as it sounds, which is why practice and education is a continuing thing here. You're never going to be done. There's always new things that you can learn here. I did have a quick question here from one of the chatters, if you don't mind. You're talking about liking volatility here. Do you have any thoughts on quantum computing? Some of those stocks have been absolute ragers recently. Have you been able to take advantage of any of that?
Yeah, they have been ragers, and that's an area right now where you're not seeing low volatility. In fact, if you look at some of the implied vol in some of those stocks, you'll see that it's pretty elevated. So to me, I can still do something there on a vertical, maybe an iron condor. I'm probably not buying time on that in that sort of stock because volatility is high. But listen, stocks don't just go up all the time, right? Mm-hmm. So you have to be able to look at something agnostically and say, okay, what are these charts telling me here? What are the fundamentals telling me? I'm not just going to buy a call spread or get long here just because this is the hot sector of the day. And that's one of the things we are seeing right now is really, we've got the nuclear stocks and quantum computing, and then you go back to the Mag 7, and it seems like almost every day or every week, there's a different flavor of the week of what is the hot stock, what is the hot sector. And we have to look to take advantage of that because nothing lasts forever.
That's right. And this week you take that dynamic you just talked about and layer on top of it a Fed meeting. which is likely going to introduce even more volatility into this. Okay, I got one personal question here. I guess it's not personal. It's my own question here based on what we're seeing. I've noticed that recently, a lot of these earning prints, Boeing is what I've got on the screen here. This is actually a pretty good example. It appears that the option sellers are winning these binary event battles. Here's another one, UNH. This is actually only down 2.7%. I believe the options were pricing in a much higher move than that. So my question here is, let me see if I had it in here. No, I don't have it handy here. So my question here is, with option sellers appearing to be winning the earnings battle, what does this tell you, if anything?
Well, it just tells me that maybe the option market is expecting too much, or that the news that is coming out, the results that's coming out, the guidance that's coming out is just, kind of muted. And I would agree with you. We're not seeing big outlier moves right now, but that's where people can really get complacent. And so one thing that I absolutely respect is and it goes down to the Black-Scholes model, is what is the expected move going into a binary event like earnings, or if there's not. And we know the expected move for those that follow that and understand how to calculate that. 68% probability, one standard deviation. Well, I want to get the odds in my favor as much as possible. So I will look at that one standard deviation move, calculate that, and see if that fits into any other sort of technicals. Does that align with some other support, some other resistance areas, moving averages, whatever it may be? But you are right. And I'm looking at Spotify right now because they had earnings this morning here.
Yep.
And, the expected move in Spotify was somewhere like $65 or so. And yeah, the stock is down, but it's not down that much. So if you went into a position like that and maybe sold an iron condor going into earnings like that, you probably are going to do pretty well. I mean, we still have 45 minutes till we open, but that stock has not moved as much as what the expected move was this morning. But again, don't get complacent. If these stocks are not moving right now, don't get complacent. And that's one of the reasons also why I said I really like volatility here and want to buy some volatility, because I just think things are too cheap.
Okay, that's perfect. And then this is the last question. We'll get you out of here on this. Can't thank you enough for your time here this morning.
Sure.
Do you think that, given everything that's going on here, that there is a potential catch-up trade when we kind of catch up to this? We're seeing some of these prints. It's not really as volatile as the options are predicting. Can that change in a heartbeat? Can we maybe have a catch-up in the back half of the year?
Oh, there's no question about it. I mean, all it takes is another news print, something like we saw with Nvidia, months ago, with what happened coming out of China, or something derails with the tariff situation, or all of a sudden inflation starts picking up. We're going to get PCE, I think, tomorrow, and more inflation data. If all of a sudden that landscape starts to change, you're going to see volatility, not just the VIX, but you're going to see volatility really spike up quickly, because there is where the catch up to me really is, because I really believe volatility is too low. I'm not saying that we're going to get back to a 30 handle or higher in the VIX or so, but I certainly think in this environment right now, maybe forward 3-4 weeks and we're out of the summer doldrums here, I think we see a VIX with a 20 handle pretty easily. I think that's where the catch up is.
Okay, that's really good stuff there. Pretty actionable as well. I guess the only question that I'd press you with here, I take a look at seasonality quite often, and it seems to me that August is more of a sideways month, followed by September, which is a traditionally pretty poor month that ends up bottoming in October. So when you talk about the volatility, where do you think it fits in on this timeline?
We're in a pretty dynamic situation right now. It's, if you look at how things have traded over the last 6, 12, 18 months compared historically, we're in a pretty unique time right now. So I'm not sure that you can really look at that historical data. I do agree with you with the seasonality, but one good point to think about is, the sell in May and go away, right? Well, if you did that, you got absolutely hammered this year. So I am not necessarily looking at that historical kind of pattern and saying, okay, this is absolutely what I'm going to do. I really need to take a deeper dive, a deeper look into what's happening now and use my intuition, use the tools that I have to kind of trade off of that. So based on what you said with September typically being a little bit weaker and that bottoms out here, that does correlate to my thinking of vol is too low. So when I say vol is too low, I'm going out September, October, and that's where I'm looking to buy a little bit of volatility because I just think everything is too cheap.
Okay. Scott, amazing stuff here today. Don't get lulled by these recent highs. Volatility is always lurking. Discover how smart traders are playing both sides of the market before the next wave hits. Scan that QR code, hit the link in the chat. Scott, can't thank you enough for your time. Appreciate you joining us here. Look forward to speaking with you next time, okay?
Look forward to it. Thank you.
Take care. Be well. That is Scott Bauer from T3, a new T3 trader being added into the fold, and they're taking some time to come out here and share some of their experience with us. We absolutely love it, and we thank them.